Bitcoin, a revolution or the riskiest gamble of our time? While millions call it the future, Warren Buffett, the Oracle of Omaha, calls it rat poison squared. Why would one of the greatest investors in history reject an asset worth trillions? It doesn't grow, it doesn't produce, and it thrives on pure speculation. Sounds dangerous, right? In 2024, as Bitcoin continues to dominate headlines, Buffett's warning feels more relevant than ever. What does he know that the rest of us don't? Stick around as we unpack his brutally honest views on Bitcoin and uncover timeless lessons from a man who spent decades mastering the art of investing. Before diving into his arguments, it's crucial to understand who Warren Buffett is. Buffett is the chairman and CEO of Berkshire Hathaway, with a fortune exceeding $100 billion as of 2024. Over 7 decades, he's built his wealth by investing in productive assets like businesses, real estate, and farms, things that generate consistent value. Buffett's investment philosophy is simple. Invest in what you understand and what produces value over time. Buffett's reputation as a prudent investor stems from his unparalleled ability to identify long-term growth opportunities. His focus on simplicity, patience, and deep understanding has allowed him to amass not just wealth, but a legacy of wisdom that continues to guide investors worldwide. One of Buffett's primary criticisms is that Bitcoin doesn't create tangible value. He has famously stated, "If you owned all the Bitcoin in the world and offered it to me for $25, I wouldn't take it. What would I do with it?" Unlike farmland that yields crops or a business that generates revenue, Bitcoin doesn't produce income or provide utility. It's merely a digital token that relies on someone else willing to pay more for it. To Buffett, investing means owning something that contributes to growth and generates returns over time. Bitcoin, by contrast, lacks the ability to grow or produce. This absence of productivity is central to Buffett's skepticism. Buffett often compares Bitcoin to gold, which he also criticizes as a non-productive asset. He explained, "If you owned gold at the time of Christ and compared it to owning farmland, the gold wouldn't have produced anything. The farmland, on the other hand, would have fed people for thousands of years." This focus on productivity underpins his entire investment philosophy. In 2024, Bitcoin's market cap might suggest value to some, but for Buffett, numbers alone aren't convincing. He insists on evaluating what an asset produces, not just its price. As he says, "Price is what you pay, value is what you get." And in the case of Bitcoin, Buffett sees no underlying value being generated, making it more akin to speculation than a sound investment. Buffett's disdain for Bitcoin is rooted in the greater fool theory, which suggests people buy non-productive assets like Bitcoin not for their intrinsic value, but because they believe they can sell them to someone else for a higher price. As Buffett puts it, "You're betting on the next guy paying you more. It's speculation, not investment." This speculative nature makes Bitcoin highly volatile, leading to massive price swings that can wipe out investors. For Buffett, this unpredictability contrasts sharply with the stability and value offered by productive assets. He often emphasizes that speculation is not a substitute for investment, urging investors to seek long-term value rather than fleeting profits. One of Buffett's most memorable critiques of Bitcoin came when he called it rat poison squared. His longtime business partner, Charlie Munger, was even more scathing, describing Bitcoin as turds and labeling the frenzy around it as dementia. Buffett believes Bitcoin's popularity stems from a lack of understanding. He remarked, "If you don't understand it, you're more likely to get excited about it." This lack of understanding creates speculative bubbles where people invest based on hype rather than intrinsic value. Expanding on this, Buffett argues that speculative assets like Bitcoin thrive on emotional decisions rather than logical analysis. He advises, don't follow the crowd. The herd mentality often leads to unsound investments. His critique underscores the importance of understanding what you invest in before diving into the market frenzy. Another significant factor behind Buffett's skepticism is Bitcoin's environmental impact. Mining Bitcoin, the process of creating new coins, requires immense amounts of energy. In 2024, Bitcoin's annual energy consumption rivals that of entire nations like Argentina or the Netherlands. This is a staggering figure that raises questions about its sustainability, especially in an era where reducing carbon footprints is a global priority. Buffett's investment philosophy often aligns with societal benefits and long-term sustainability. The enormous energy demands of Bitcoin mining not only conflict with these principles, but also make it an unattractive option for environmentally conscious investors. This impact is compounded by the fact that Bitcoin produces no tangible value to offset its environmental cost. Buffett once quipped, "Investments should benefit society, not burden it." Additionally, the environmental critique of Bitcoin adds to its unpredictability. Governments and regulators may impose stricter measures to curb energy consumption, which could directly affect Bitcoin's growth and adoption. For Buffett, such uncertainty reinforces his stance against investing in it. The cryptocurrency market is rife with fraud and speculation, further fueling Buffett's criticisms. He stated, "It's an area that attracts charlatans who see an opportunity to exploit people trying to get rich quick. With minimal regulation and transparency, cryptocurrencies create a breeding ground for scams. For example, Bitcoin and other cryptocurrencies have often been linked to Ponzi schemes, fake exchanges, and even ransomware attacks. These risks highlight the speculative nature of the market and its potential to harm inexperienced investors. Buffett's famous warning, "Risk comes from not knowing what you're doing," underscores his caution against entering such a volatile and poorly regulated space. Cryptocurrencies also lack the safeguards that traditional financial systems offer. Unlike stocks or bonds, which are subject to regulatory oversight, cryptocurrencies operate in a largely unregulated domain. This means there's little recourse for investors who fall victim to fraud or market manipulation. Buffett's emphasis on transparency and accountability makes Bitcoin an investment he'd rather avoid. Buffett's overall perspective is that the speculative allure of Bitcoin blinds many to its risks. He believes that understanding the nature of an asset is critical to making sound investment decisions. As he puts it, investing without understanding is like playing poker without knowing the rules. It's a losing game. Buffett frequently contrasts Bitcoin with productive investments, such as farmland or businesses. He shared an example from the 1980s when he bought farmland, stating, "Every year I looked at how much it produced and earned. At the end of the period, I still had the farm and the income it generated. This productivity creates real value, making it a cornerstone of his investment philosophy." Now imagine buying real estate. Even if the market fluctuates, the property holds intrinsic value. You can live in it, rent it out, or use it for various purposes. Bitcoin, by comparison, offers no such productivity. Its value depends entirely on speculative trading, which Buffett views as inherently unstable. Buffett has emphasized, assets to be valuable must deliver something to somebody. Bitcoin, which doesn't produce income or generate utility, fails this basic test. For Buffett, owning Bitcoin is akin to owning a collectible. It may have sentimental or perceived value, but it doesn't create wealth. While Buffett is critical of Bitcoin, he acknowledges the potential of blockchain technology. Blockchain, the decentralized ledger system powering Bitcoin, has numerous applications, from enhancing financial transaction security to improving supply chain transparency. Buffett separates the technology from the cryptocurrency, saying, "Blockchain does not depend on Bitcoin. It's ingenious, but Bitcoin has no unique value at all." This distinction is crucial. Blockchain represents a technological advancement that can revolutionize industries, but Bitcoin as an investment lacks the productivity and value creation Buffett seeks. His skepticism of Bitcoin doesn't extend to the technology itself, underscoring his nuanced understanding of the space. Buffett's trust in regulated centralized systems like banks and traditional financial institutions also plays a role in his Bitcoin skepticism. He stated, "The United States government will never allow Bitcoin to replace its currency. It's out of the question. Centralized systems offer stability, transparency, and accountability, qualities that align with Buffett's investment style. Centralized financial systems are backed by robust frameworks that ensure stability and confidence in their operations. Bitcoin, in contrast, operates on a decentralized model, which can lead to unpredictable fluctuations and limited recourse in the event of disputes or fraud." For Buffett, these uncertainties make Bitcoin a less appealing choice compared to established financial systems. A significant driver of Bitcoin's popularity is FOMO, the fear of missing out. Buffett cautions against making investment decisions based on emotion rather than logic. He once remarked, "The stock market is designed to transfer money from the active to the patient." This principle applies to Bitcoin, where hype and emotion often overshadow fundamental analysis. The excitement around Bitcoin often blinds investors to its risks. The promise of quick wealth creates a rush to buy without a clear understanding of the underlying asset. Buffett's emphasis on patience and informed decision-making serves as a reminder to prioritize long-term value over short-term gains. For him, avoiding the emotional traps of FOMO is crucial to sustainable investing. Bitcoin's meteoric rise has drawn comparisons to past speculative bubbles, such as the Dutch tulip mania of the 1600s and the dot-com bubble of the early 2000s. These financial frenzies were fueled by hype, misinformation, and the belief that prices would perpetually rise. Warren Buffett has often highlighted the dangers of speculative markets, remarking, "It's easier to get excited about something when you don't understand it." Speculative bubbles tend to follow a predictable pattern: rapid price increases, driven by mass enthusiasm and a fear of missing out, followed by dramatic crashes that leave many investors with substantial losses. Buffett's perspective on Bitcoin aligns with this pattern. He warns that speculative assets rely more on emotional fervor than on tangible value, making them inherently unstable. In 2024, Bitcoin's extreme volatility continues to underscore this point. While some investors may see opportunities for short-term gains, Buffett believes the risk of financial disaster outweighs any potential reward. He emphasizes the importance of basing investments on intrinsic value rather than fleeting trends. "Only when the tide goes out do you discover who's been swimming naked," Buffett quipped, reminding us that speculative bubbles often reveal their flaws too late. Does Warren Buffett's skepticism mean you should never invest in Bitcoin? The answer depends on your financial goals, risk tolerance, and investment philosophy. Buffett's advice aligns with his commitment to stability and long-term value creation. If your priorities are similar, his criticisms of Bitcoin may resonate with you. Buffett's focus on productive assets like businesses, real estate, and farmland provides a sharp contrast to Bitcoin's speculative nature. He believes in building wealth through patience, understanding, and assets that generate consistent value. Do not save what is left after spending. Spend what is left after saving, he advises, underscoring the importance of disciplined financial planning. However, for tech-savvy and risk-tolerant investors, Bitcoin might represent a high-risk, high-reward opportunity. It's crucial, though, to approach such investments cautiously and only allocate money you're prepared to lose. Buffett's approach serves as a reminder to evaluate investments critically, avoid emotional decisions, and focus on long-term sustainability. Warren Buffett's insights into Bitcoin challenge us to think critically about the nature of investments and the value they create. As he once said, "Be fearful when others are greedy, and greedy when others are fearful." This timeless advice encourages us to avoid being swept up in market trends and to prioritize informed, deliberate decisions. While Bitcoin's rise has been extraordinary, its speculative nature and lack of productivity make it a divisive investment. Buffett's skepticism offers a compelling counter-narrative that emphasizes stability, value, and long-term growth. Whether you agree with his criticisms or see Bitcoin as a game-changing innovation, his wisdom provides a valuable framework for navigating today's complex financial landscape. What's your take on Warren Buffett's perspective? Do you find his criticisms valid, or do you believe Bitcoin is the future of finance? Share your thoughts in the comments below. Don't forget to like, subscribe, and hit the bell icon to know more strategies for your money to invest in the correct way. If you found this video helpful, you would definitely love Warren Buffett's simple investment strategy to turn $10,000 into millions. Click on the video on your screen to watch. Thank you for watching, and we'll see you in the next video.